Octopus and Inflation. We have 8 tentacles on an octopus, and we've been covering the 8 things we need to consider in this environment. My name's Todd, tax attorney, CPA, certified financial planner, host here on the Professional Edge for over 5 years. So very happy that you're tuning in and listening. And what we're trying to do is cover these 8 considerations given the Fed historical interest rate adjustment of 75 basis points this past week, and give our listeners here on the Professional Edge things to consider. We have discussed 7 of the tentacles on the octopus, and here is number 8. That is your emotional reaction to this environment. Yes, equities have slid, bonds have slid. With interest rates going up, we learned that the value of the bond is going to fall. And you say, okay, where do I need to go as an investor? Well, let's not react emotionally to these headlines. Yes, we watch CNBC and they use these magic adjectives of stocks plummet, or the R word is being talked about now, and that is the recession. The key word going forward is, how is this inflation going to be tamed? Number one, the Fed has said, you know what, we're going to increase borrowing costs. If we increase the borrowing costs, then we're trying to decrease demand for goods and services that require financing. So if you are in the sector of building and you need to buy a new backhoe, and you need to borrow that money, well, the borrowing cost has jumped substantially. A 30-year mortgage, the interest rate crested over 6%. Yeah, historically, that's still pretty low. Some of our listeners had 13, 17% on their mortgage, and they were very happy to get a 15% mortgage rate. Well, a lot of us have forgotten those numbers, and we have been spoiled. We have less than 3% on a 30-year mortgage. Well, now it's 6%. So the cost of carrying that mortgage has more than doubled. And therefore, the Fed is saying that that is going to decrease the demand for housing. So this red hot housing market of, getting multiple bids over the list price is going to be tempered. So that will slow down the demand for housing. Then that's going to also impact the tradespeople that are building these houses. So they're not going to have to build as many people. They're not going to have to build as many houses. So therefore, they're not going to need as many individuals on the payroll. So when we contract this or try to decrease this demand to stop the inflation is basically the bid up of prices because there's this excess money supply. Well, the Fed is late to the game because they were still buying $120 billion a month in equities just here less than 60 days ago. That's crazy in this environment. So this easy button that we've had as an investor is gone here for a while. So we need to adjust our portfolio, and we are talking about the octopus and inflation. There are 8 things to consider that we're talking about in this session, and there's 8 tentacles on the octopus. So we're on number 8, and this is your emotional response to these headlines. Well, responding emotionally to anything is not probably a prudent strategy, especially when it relates to your finances, your planning, and your just safe and secure retirement. So again, number 8, let's not react emotionally to these headlines. Let's figure out your plan. Let's make your plan work in this environment. And if you've not adjusted your portfolio, this is a wake-up call, being a listener here on the Professional Edge, that there are adjustments that are needed in your portfolio. So that easy button of A, you're going to do incredibly well by just set it and forget it. Again, I go back to it's easy to hold the tiller in calm seas. Well, the seas have changed. The storm cloud is here, and the waves are starting to crest over the front of the boat. So you as a listener here on the front or on the professional edge, think about what is the front of the boat. Is that the bow or the stern? Well, it's the bow. So the waves are cresting over the bow of the boat. And now holding that tiller on your finances, your portfolio is a little bit different. So again, if you're not sure what to do, we have these 8 tentacles on the octopus that we've covered here on the professional edge. Give our office a call at 877-654-9798. That number again, 877-654-9798. So when we think about this, what has actually transpired in the environment? Well, you know what? Since 1994, the 75 basis point adjustment by the Fed has never been on the radar. So that's over 3 decades, almost 4 when you think about it. So the would-be home buyer is going to be hesitant now because the mortgage rates have actually doubled on a 30-year mortgage. We've had a 1.5% increase in interest rates in under 90 days. So that increases the borrowing costs. So therefore, we're going to have to figure out about what's going on with our portfolio. How is that going to affect us? Well, you know what? You're going to get your statement at the end of June, and it's going to show a decrease in the value of your bonds. It's just by definition, it's a financial rule which says interest rates go up, bond values go down. So we've also had $800 billion added to our credit card debt in the first quarter of 2022. So scratch your head for a minute. I thought the economy was doing extremely well. You know what? It was. And now with this increase in food prices and the increase in gas prices, what are individuals doing that don't have the excess each and every month in their budget? Well, they turn to their credit card, input it into the gas pump, and they're going to get their statement in June. I've seen no decrease in demand around the metro Atlanta area on the retail side or on the dining out. But that will contract because individuals are going to have to come up with the money somewhere. So therefore, they're going to cut back. Instead of eating out 3 times a week, they may still eat out, but it's only going to be 1 time a week. And you multiply that across all the consumers, and you know what? You're going to have a reduction in the demand for restaurants. Well, in order for the individual to get the consumer back to the restaurant, they're going to have to offer decreased prices. And that is sort of the macroeconomic of what's trying to be transpired by the Fed. It says we are going to decrease demand. And with the high food prices and with the high energy prices, think of the gas pump, well, the consumer has less money to spend. So if we make it even costlier to spend money, then we're not going to spend as much. And with the decrease in demand, then the decrease in price adjustments is to follow. That's the theory. So what has happened to trigger all this inflation? You got to sort of understand what's been going on. The money supply, that is the Fed pumping money into the system, has went up by 40% in the last 2 years. That is dramatic. Think about that. 40% in the last 2 years has been the increase in the money supply. When the Fed sent out these monies for COVID, that was the Department of Treasury. Now the Fed has been buying the accommodative policy of the Fed. They have been buying equities in the market, and they were buying $120 billion a month. A lot of us have a hard time conceptualizing what $1 million is. Well, $1 billion is 1,000 million. It's staggering. And they were doing 120 of these every single month. So you as a listener here on the Professional Edge, we had these 8 tentacles on the octopus we've covered. And let's quickly review what exactly those 8 items are. Well, tentacle number 1 on the octopus is inflation adjustment. What are your interest rate sensitive investments that you need to consider? A, make a very professional analysis, a very pointed calculation on what you're going to hold and what is interest rate sensitive, and make an adjustment within the portfolio. Tentacle number 2 on the octopus and inflation is bonds. We understand that the duration of bonds is going to affect the value of those bonds as interest rates continue to rise. It's been telegraphed that the Fed said, hey, if we're not going to get the response from the market on a 50 basis point, we're going to go further. Well, we got the further this week when they raised rates by 75 basis points. Decade-long plus. Basically, it's been nearly 3 decades before we've ever seen a 75 basis point increase by the Fed. Tentacle number 3 on Octopus, preferred stocks. We, as an investor, hold these to get the cash flow, but these are also interest rate sensitive. So therefore, we need to consider whether we need to continue to hold these, whether we're paying tax on money we're not spending, and readjust your portfolio accordingly. Number 4, we got equities. Yes, they have been hit in this environment. Equities are down 25%. Bond prices are down 11%. Crypto has been crushed. Bitcoin has lost 25% of the value since last Friday, and Ether has lost 1/3 of its value. So this is a very highly correlated asset to the economy, the economics of the stock market. Most individuals were like, well, Bitcoin's the same as cash. Well, this right here tells me the Bitcoin losing 25% of its value in a week has definitely broken the definition of a uncorrelated asset. It is highly correlated, and Ether losing 1/3 of its value is a highly correlated asset, at least now by definition it is. So that is another thing that we need to look at is what equities do you have in your portfolio, and is there an adjustment to make? The 5th tentacle on the octopus is harvest your tax losses. Being a tax attorney and a CPA, it does make financial sense to eliminate some of these losses, capture the tax loss, and reduce your taxes. That is a benefit from the decrease. So we're trying to make lemonade out of the lemons. Number 6 tentacle on the octopus was gifting. What assets should we actually gift away now because they've decreased in value? When they recover in value, then you move that appreciation down to the next generation at no additional tax cost to them. Excuse me. Number 7 tentacle on the octopus that we talked about. Yes, it is a unique topic that we're talking about, the octopus and inflation. Number 7 is the sequence of return risk. If you retired in November of 2021, everything was magical. We are now down, again, the equities, roughly 25%, bonds, 11%. If you were in crypto, 25% for Bitcoin, 1/3 for Ether. So can your portfolio sustain these sequence of return risk? Because most individuals just say, you know what, if I have my $1 million, I get a 6% rate of return. That's $60,000. That's $5,000 a month. And multiply that number out. If I only spend $50,000, I'm going to have $10,000 more. The compounded rate of return of $1 million now, $10,000. It's magic. Well, we all know that the investment world comes with random rates of return. So again, give our office a call at 877-654-9798. That number again, 877-654-9798 to understand this sequence of return risk. We addressed that. And number 8 tentacle on the octopus is your emotional reaction to the headlines that come forth. Stock market plummets. Well, you know, there are adjustments in the stock market, but a plummet, in my opinion, is the wrong adjective. Yes, it's an adjustment. It's a correction, but it's not going off the cliff and going to zero. So my name's Todd, tax attorney, CPA, certified financial planner. I appreciate you listening in to the Professional Edge and how we relate an octopus to inflation. Thanks for listening.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with Scene, call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Scene Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Scene is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Scene Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Scene Todd by calling 1-877-654-9798. That's 1-877-654-9798.